Hello everyone and a very warm welcome to the webinar today, which is all around payroll year end in Sage Payroll. My name is Sarah and I will be hosting and presenting the webinar today, and I am joined in the background by some of my colleagues who are ready and waiting to answer your questions. So to get us started, I will quickly run through a little bit of housekeeping first, just so you know how everything works during today's session. On the current slide, you will see some controls and they're going to appear down the right-hand side of your screen. You'll notice that your microphone icon is red. That just means that it's muted automatically and you can't actually unmute yourself, so don't worry about any background noise coming through from your end. If you click on the speech bubble with the question mark, that will open up your Q&A panel. You can type your questions in there anytime during the session. Just hit send and someone will get back to you with a written response. Just a tip, you can't actually download the Q&A. So if you do want to make a note of any answers, I would just copy and paste them, pop them into a Word document. I have provided a couple of handouts for you today. So there is a full colour version with clickable links and a black and white printer friendly version of today's slides. And you can download these by clicking on the little paper icon that is just below the Q&A panel. And if you would like a closer look at any of the demonstrations today, you can switch to full screen mode by clicking on the 4 arrows at the bottom of the screen. And to get back to normal, just click on it again. So that is how everything works. Let's take a look at what we're going to be covering today. So we'll start with an introduction. So we'll walk through some key payroll year-end dates and deadlines that you need to be aware of. After that, I'll take you through preparing for year-end. So we'll look at things like week 53, directors, and just getting ready for year-end. Next, we'll do a step-by-step walkthrough of completing your payroll year-end. So submitting your final EPS and producing P60s. And then we'll look at how to prepare for the new tax year as well. So updating your payroll settings, tax codes, and any allowances for the new year. And then we will look at some of the key legislation changes for 2026-27. And of course, the upcoming SSP changes as well. So we'll look at how that's going to work in the programme. And we will take a look at some new features in Sage Payroll for the new year. And then, as always, we will finish off with some further support and questions. So with all of that said, let's get started with a bit of an intro. So I do want to run through some of your payroll year-end key dates and deadlines. So first date I want to draw attention to is just early March. Now, this is where the payroll year-end update is deployed. Now, this just ensures you have legislation to move into the new tax year. And the best part about this one is there is absolutely nothing you need to do. So all of this is handled in the background for you. Now, the next key date to be aware of is the 5th of April, which is the last day of our current tax year, so 2025-26. And by that date, you should have completed all of your final pay runs for the year. Then got the 6th of April, so that marks the start of the new tax year, 2026-27. And if we look a bit further ahead to those dates, there are a couple of important deadlines. So we have the 19th of April. This is the deadline to make sure that your final submission for the tax year is submitted. And that submission is the one that is part of your payroll year-end process. And then we have the 31st of May, and that is your deadline to issue P60s to all employees who were employed by you on the 5th of April. Now, just keep in mind that these are deadlines, so there is nothing stopping you from doing these earlier as well. If anything, we encourage that. So next thing I want to do is just walk you through some steps to prepare for a successful year end. So I've put together a simple 4-step checklist, and I'll walk through each of these steps one by one. So step 1 is to check whether or not you're going to have a week 53 this year. But this does only apply if you run weekly, fortnightly, or 4-weekly payrolls. If you pay your employees monthly, you will never have a week 53. So really, you can just skip this step and move straight on to step 2. So step number 2 is making sure that you've processed any leavers who left during the 2025-26 tax year. So this one really just a quick check to make sure no one has slipped through the cracks before you go ahead and process final payments. Step number 3 is actually processing your final pay run for 2025-26, so your very last pay run of the tax year. And step number 4 is to simply submit your final APS. So of course your FPS will get sent automatically when you complete your pay run. So only other thing that you need to do is make sure you have that final APS submitted for month 12 as well. So let's take a look at some of these steps. So let's start with step 1, week 53. So again, like I just mentioned, if you pay staff monthly, week 53 doesn't apply. So for weekly, fortnightly, or 4-weekly payrolls, you might have a week 53 if your regular payday falls on the extra day at the end of the tax year. So a tax year has 365 days, or 366 in a leap year, which doesn't divide evenly into weeks. So this creates 52 full weeks plus 1 extra day. Now, if your normal payday falls on that extra day, that's when a week 53 can occur. So for this tax year, you will only have a week 53 if your regular payday is Sunday, the 5th of April. If you never pay on a Sunday, you will not have a week 53. Couple of ways to check if you have a week 53. So you can use the tax calendar or you can use your payroll calendar as well. But remember, if you only process a monthly pay run, monthly payrolls will never have a week 53 because the tax year is split evenly into 12 months. Now, if you do have a week 53, don't worry, payroll will automatically calculate the tax on a week 1 basis. So you don't need to change any tax codes or adjust any settings. You do just want to process the pay run as normal. Now, if you do have a week 53, any employees that are affected might later down the line receive something called a P800 notice from HMRC. And that's just as week 53 gives an extra week's tax-free allowance. But that is completely normal and nothing to worry about. And of course, because week 53 is on a Sunday this year, there isn't going to be many people that do have one this time round. So it might well be that you're not affected at all. So what I'm going to do, let's get jumped into the payroll for our first demo. And what we're going to do is we're going to check for week 53 and we'll also process a final period of the year and tick off some of our lists. And I'm going to check first for a week 53. So a really easy way for me to check is if I go into settings and into my payday settings, I can view my pay calendar and I can see there I do not have a week 53. So you can see I've got week 52 as my usual payday is Friday, and then it goes straight to week 1. So no week 53 for me this year. Now I do have a leaver to process, so I'm going to go ahead and do that now before I process their final pay. The employee 3 is leaving on the 31st of the 3rd, 2026. So I'm going to save that. And you can see now their status is set to leaving print P45 after final pay run, which is exactly what I want. So now I have made my employee a leaver, I can crack on and process my final pay runs of the year. So I'm going to do my weekly payroll first. See, I'm being prompted to increase the national living wage, which is something we'll look at a little bit later on. I'm going to amend that. going to go and process my monthly payroll as well. Got no absences. Now I do have a director on my payroll, and you can see it is calculating NI cumulatively as I am processing month 12. Now that's totally normal for a director on a per pay run basis. Absolutely nothing to be worried about, but we will circle back to this once I jump back to the slides. So again, payroll is going to do all of that recalculation automatically for me. No other changes to my figures, so I'm going to go ahead and complete that final pay run. So now that my FPS is successfully sent, again, that goes automatically as part of completing your pay run. I do just want to do my final month 12 EPS. So I'm going to go to Actions, Record Payment EPS, pop my payment date in. I have no CIS, so I'm just going to go ahead and submit. Now this EPS, the one I've just sent for my month 12, isn't actually my final EPS of the tax year, as that will be done in my dedicated year-end process. So that is my final pay run all done and dusted. If I have a look, I can see my lever has dropped off as well. So I do just want to recap a couple of things that we've just seen in the demo. So we checked on our pay calendar if we had a week 53. My usual payday is a Friday, so I didn't have one this year. But if you do, payroll will handle that calculation automatically for you. I then went through and processed my leaver. So I went into the record, popped in a leave date, and processed my final pay run as well. And that just means that the leave and details will get picked up on my final FPS submission. We've seen that we had an employee that was a director on a per pay run basis that was being recalculated. And this is something I just wanted to draw a little bit of attention to. So if you do have a director set up on that basis, it does mean that their national insurance is recalculated in that final pay period of the year. Now, just a heads up, all directors, regardless of which status that you use, must have their NI calculated using annual earnings and annual thresholds. The only difference between those two methods is when that calculation happens. Now, I have linked to some further guidance on the slide, and there's a couple of further guidance in the handout if you are wanting to know a little bit more detail about the difference between the two methods. But again, this is something that payroll handles automatically. We've seen that there was a little flag in the pay run just to give us a heads up. So if we do have someone on the per pay run method, we can expect NI to be maybe higher or lower in that final pay period, depending on what's happened throughout the year. And then finally, we submitted our EPS. So of course, our FPS goes off automatically as part of completing our pay run. But then we recorded our payment and our EPS for month 12 as well. Now, might not be that an EPS is required at that point, and that is absolutely fine. It might well be that nothing has changed. But just as a heads up, these submissions aren't the final ones for your tax year. So final submission isn't sent at that stage. Instead, that final EPS is sent separately as part of that dedicated year-end process. So just to quickly recap, we went in and we checked if we had a week 53. Remember that only applies to weekly, fortnightly or 4 weekly payrolls where the regular payday falls on Sunday, the 5th of April. Step 2, we checked whether any leavers still needed to be processed. Step 3, we processed our final pay run for the tax year. And step 4 was simply just submitting our EPS or recording our EPS for a month 12. And with all of those steps completed, that means I'm fully ready to move on and actually complete my payroll year-end process. So I do just want to take a moment to walk through the payroll year-end process screen. So you can see the year-end tasks listed in order. So the first task is just employee pay values for the tax year. And that is just where you want to review all your employee pay values just to make sure that the info is accurate before you go ahead and finalise things. Now, next up is your APS submission. So this one is really important because it's your final submission of the tax year. And this is the one that must be completed and sent to HMRC by the 19th of April. Now, the third step is distributing your P60 certificates to your employees. So once all your year-end figures are confirmed, you're happy, you can upload your P60s to Sage HR Online Services if you are using them. You might download them as a PDF and email them, or you can print out onto plain paper as well. So a few different options there when it comes to P60s. Now, finally, you can see there is an option to submit supplementary FPS if it's needed. Now, that isn't actually part of the year-end process, but it is just used when corrections for the tax year need to be made after the 19th of April. So with all of that said, I do just want to jump into a demo of the payroll year-end process. Let's just bring these slides down. And let's get jumped back into payroll to complete our year end. So I'm going to go into my year end option just up at the top of payroll. Make sure my tax year is set to the correct year. So 2025-26, that's looking spot on. Now, first thing I'm going to do is review my employee pay. So my P11s for my employees. And I can view for all of them and download as well. Now, this is where I would maybe go off and cross-reference these P11s with some of the other reports I've saved throughout the year, just to make sure all of the figures were correct and there's nothing that I'm missing. So I can save those. All of those figures look spot on for me. So I'm going to go back and tick off that first step. Now, my next step is submitting my APS submission, which is my final submission of the tax year, which will let HMRC know that I've completed my year end. And remember, the deadline for this one is by the 19th of April. Now, you also will have an option to enter a date that your Pay As You Earn scheme has closed down. If that is applicable to you, you would do this on this first screen. But my scheme is remaining open, so I'm just going to skip that for now. You can also review any balances that you've submitted throughout the year. Now, I've had no CIS or statutory payments this tax year, so that's all looking good for me. And then as simple as that, I can go ahead and submit my final APS. And my APS submission is successfully sent. Now, next step is distributing our P60s. So the majority of my employees do use the Sage HR online services, but I do like to print a copy for my records, and there is one other person that does still like it printed out. So I'm going to print my P60 certificates off first. You can see that will print onto plain paper. And now I have that for my records, I can go ahead and publish them online. Now you can set a date that these will be available to view for employees. Now I'm just going to go for the 6th of April. And that is well in time for the deadline of the 31st of May. So I'm going to save that. And you can see those P60s are now being published. And they've successfully been uploaded. So I'm going to tick that box for my P60s. And that is my year-end process all done and dusted. Now, I might want to maybe double check my CHHR just to make sure that those P60s are there and ready to go. So I'm just going to do that now. It's going to take me into my CHHR as an administrator. I'm going to go to pay slips just down the left-hand side. And then over to my P60s tab. And I can see that my 2 employees that are set up for CHHR Online Services are on there. And they've got the published date of the 6th of April as well. So that's all looking good. I'm just going to jump back to payroll. And that is my year-end process complete. Now, remember, you do have the supplementary FPS there, but that is very much only if you are needing to make a correction. So that is it for the payroll year-end demo. Just a little reminder around P60s. So of course, today we've uploaded on online P60s. Now employees can download the app. It'll look a little something like this on the slide. And they can view their pay slips as so. So that's just a little bit of a view of how the employees might access it on their end. So definitely worth taking a look at Sage HR if you haven't got that activated already. So now that's the payroll year-end process done. The next thing I want to take a look at is actually getting ready for the new year. So when it comes to getting ready for the new year, there's really 3 key steps to this. So you want to set up employment allowance if it's applicable. You want to update any employee tax codes. And you also want to choose your HMRC reporting frequency. So those would be the 3 key things to get prepared for the new year. Now, employment allowance does remain at £10,500 this year, and a lot more people are eligible since that £100,000 threshold was removed last year. And remember, state aid rules no longer apply. So this submission might look slightly different this time round. Now, exclusions still do apply, but if you would like to know more about the exclusions, just follow the link in the handout, or there is an extra slide in the handout that will run through that as well. Next up is updating your employees' tax codes. So you will be prompted to remove any week 1, month 1 flags on your first pay run. But you can also update the tax code from your HMRC notices as well if you've got that set up. So that will apply any individual tax code notices like your P9s that you might receive. And of course, the emergency tax code this year does remain frozen at 1257L. Last but not least is choosing a HMRC reporting frequency. So just as a reminder, this is how often you produce your P32 and submit your EPS and pay HMRC. Just to clarify, it isn't how often you pay your employees. Now, you do want to be a bit cautious with this one because once you do perform a pay run, it will lock that reporting frequency and you can't actually change it again until the following tax year. So definitely something to be a little bit cautious of. So those are your 3 main steps. Now let's get jumped back into payroll and look at those in action. So first thing I'm going to do is I'm going to submit my employment allowance claim. I know my company is definitely eligible. It doesn't fall into any of those exclusion reasons. So I'm going to go ahead and submit claim. Now, as you can see, this does look a little bit different this year, and that's because state aid rules no longer apply. So no question around state aid, just simply confirmation that you know that your company is eligible. You can see some of the exclusions are highlighted as so. Now I know I'm eligible, so I'm just going to go ahead and submit that. And that is step number 1, all done and dusted. Next, I want to look at my tax codes. So I am just going to check to see if there's any HMRC notices first. Now, there aren't any for me because I'm in a demo environment, but if there was any, you would apply them in here. So with that said, I am just going to go into my pay runs now. Looks like my weekly employee is all okay. And I also want to confirm my reporting frequency as well. So I report to HMRC monthly. So I'm just going to save that in. But again, once this is saved and you've processed a pay run, can't be changed. So definitely double check that if you're unsure. And I'm going to do the same check for my tax codes for my monthly employees. Now we can see they're all looking good. And if you do have any week 1, month 1 flags, Payroll will remove those automatically within that screen. And that is me ready to process in the new year. So just to recap our checklist. So we've went through and we have set up employment allowance. Of course, if it's applicable, make sure no exclusions apply to you. We have updated our employees' tax codes. So we checked in our HMRC notices mailbox and we made sure there wasn't any week 1, month 1 flags remaining when we went in to process our first pay run. And then we also were asked to confirm our HMRC reporting frequency when we processed our first pay run. And we selected monthly and confirmed that. So those are our 3 preparation steps, all ticked off. So next thing I want to look at is what's new for 2026-27. So this slide has all of the legislation changes on there. Now there are just a few that I want to draw a little bit of extra attention to. So we have our national minimum and living wage has increased from the 1st of April to £12.71. And we did see that a little bit earlier when we processed our final weekly pay run. We did see the prompt to increase that. We've got our student loan thresholds that have been updated and the introduction of a plan type 5. Our parental pay standard rate has increased to £194.32 and small employers relief NI compensation has increased 0.5% to 9% as well. And last but definitely not least is SSP. So we've seen a rate change of £123.25. But we have also seen big changes with the minimum earnings and waiting days being totally removed. So that rate could either be the £123.25 or 80% of the employee's average weekly earnings since this change. And that is the change that I want to focus on today. So what is actually changing with SSP? So firstly, SSP will now be payable from day 1. The previous rule requiring the 3 waiting days has been abolished. So employees will start receiving SSP from the very first day of sickness. Now, secondly, the lower earnings limit has been removed. And that means that there is no minimum earnings requirement and all employees are now eligible for SSP regardless of how much that they earn. Along with that, there is an introduction of a new calculation method. So SSP will now be calculated using the lower of 80% of the average weekly earnings of the employee, or the flat weekly rate of £123.25. So it is whichever amount is lower is the one that must be paid. Now, I have included a simple example on the slide. So, for example, if an employee earns £150 per week, 80% of that is £120. Now, because £120 is lower than the flat rate, the SSP payable would be the £120. Now, I do also want to look at how transitional protection works under the new SSP rules. Now, these protections are designed for employees who would otherwise see their SSP reduce on the 6th of April under the new rules. So this one really does apply to a very specific group of people that are already on sick leave when these new rules come in. So it might well be that none of you ever come across this situation, but definitely worth a mention. But rest assured, Payroll will handle all of that for you anyways. Now, an employee is transitionally protected if all three of these conditions apply. So they earn £125 to £154 per week. So that's £154, 5 pence, sorry. Now, they'll have already been receiving SSP before the 6th of April, and they'll also still be off sick on the 6th of April as well. Now, if someone meets all of those criteria, they won't switch immediately to the new calculation method. Instead, they'll continue to receive the flat rate of £123.25, and then they stay on that flat rate until one of two things happen. They return to work, or they reach the end of their SSP entitlement, which is still 28 weeks. So key message here is anyone in that transitional window is protected from a potential drop in pay and will just remain on that flat rate until their sickness naturally ends. So with all of that said, let's take a look at some of these new rules in action. So I am going to look at my monthly employees first. So I'm going to go through to absences. Now I'm going to add an absence for my first employee. And my first employee was actually off for a week. Just going to pop those dates in there. Now remember, previously, if an employee was off for a week, they would have to serve 3 waiting days, providing there wasn't any linked period. So that first payment would often be lower. That's the absence entered for my first employee. So my second employee's also had some absence, but this employee was only off for 1 single day. Now remember, under the previous rules, if an employee was sick for less than 4 continuous days, no SSP would be payable whatsoever. But under the new rules, SSP is payable from day 1. So I'm going to save that just there. So now let's take a look to see what effect that's had on the pay run. So you can see my first employee who was off sick for a week. Now they are a high earner, as we can see. So they are getting £123.25, which is a full week of the new rate. Now remember, previously 3 waiting days would have had to have been served, so that payment would have been lower. But as SSP is payable from day 1, there are no waiting days. This employee is getting a full week. Now my second employee, remember, they just had 1 day of sickness. Now under previous rules, nothing would have been due for that 1 day, as you would have had to have been off for 4 continuous days or longer. But because SSP is now a day 1 right, it is paying out 1 day of sickness. So I can figure that out. if I want to, so I can do the weekly rate, the £123.25. Now this employee has 5 qualifying days, so I'm going to divide that by 5, and that gives me the daily rate of £24.65. So that is the single day that is being paid out. Now from here, I might just need to adjust my salaries just to account for the sickness. But I'm not going to do that just now. I do want to show you another example with my weekly employee. So my weekly employee is a lower paid employee. Previously, they wouldn't have qualified for SSP at all. But under the new rules, they do now qualify, as everyone does. But likelihood is they're going to get the lower rate of 80% of their average weekly earnings. So I'm just going to pop a week of absence in there. They work 5 days in the week. I'm going to save that. Let's have a look at what that does in the pay run. So as you can see, it is now paying out SSP. Previously, this employee wouldn't have been eligible. However, as this employee is a lower earner, they are getting 80% of their average weekly earnings as that lower amount. So that is the lower between the flat rate versus the £98.12. So it is the lowest amount that would pay out. So previously, this employee would get nothing. Now they are getting £98.12, which is 80% of their average weekly earnings. Remember, it's always going to be the lower of the two. So that is a bit on how SSP works with the new rules applied. And as you can see, really simple, as payroll is going to handle all of that for you. Now, with this new legislation, there are going to be some common questions around this. So I did want to include some just so you have all information possible. So first up, we have with the day one right to SSP, is that only if you exceed 3 days, or do you still get SSP even if you are absent for one? Now, we did cover this in the demo, but answer for this one is the new Employment Rights Act removes those waiting days. So yes, employees will receive SSP from the first day of absence, and there is no minimum absence period. So as we've seen in the demo, even a single day off will qualify for SSP. Next up, does my employee need to give me any documentation to prove their absence? Now, the process hasn't changed with this one. So employees only need to provide a fit note if their sickness lasts more than 7 days. For shorter absences, so under the 7 days, no medical evidence is required. They can simply self-certify when they return. Now, how you do that is up to you as an employer. So I would advise agreeing with your employees how that self-certification is completed. So it might be something like using a form or sending an email. New starters, all workers qualify from day one. Simple answer is yes. So from 6th of April, SSP is payable from day one, and the lower earnings limit does not apply. So that does mean everyone is eligible. Next up, how do we handle company sick pay? So with this one, I would record the absence days so that the statutory calculation happens, and then just top up when you're processing the payment for your employees. And then lastly, what period is used to calculate the average weekly earnings? Now, the 8-week reference period before the first day of sickness or the start of a linked period. So that is when that calculation will happen. So before we go ahead and wrap up, I do just want to run through some new features and improvements this year for Sage Payroll. So of course, we've seen the SSP legislation changes in action. So all you need to do is simply record the absence and Payroll will do the hard work for you. We do have some new and improved in-product support, which I'll be showing you in a second. We have the employee details report and HMRC notices. I know these have been in there for a little while, but did want to touch on those in case you haven't checked them out just yet. Now, we will also have the ability to apply student loan notices through your HMRC notices coming soon. That isn't live just yet, but watch this space. That one will be coming very shortly. So back to payroll just for one last demo. And I just want to show you a couple of these new features in action. So first up is the help function. So if I go to help just in the top right, you can see this is very much new and improved, and it is powered by Copilot as well. So you can see payroll year end is at the top of our recommended articles there, but we have plenty of other support available. I can also search for any keywords or phrases if I want to narrow down my search. Now, if you are searching for support, but maybe you just need a bit of an extra hand, we also have a brilliant chat function here as well. So very busy time of year for everyone. You do always want to make sure that you are using all resources available. So you can see there, we have Copilot checking up, seeing what we need help with. And if it is something that is a bit more complex, it will reroute you to speak to an agent as well. So really great addition, this one. Now, in addition to this, like I mentioned, we do have our employee details report, and we can run that for frequencies and tax years as well. We have our HMRC notices as well. So if you haven't got that set up, would strongly recommend that, especially with the introduction to the student loan notices coming very soon as well. So a couple of new features there just to bear in mind going into the new year. Now, before we wrap up, there is one favour I do want to ask from yourself. So we do just want to try and shape our training around what you are going to find most useful. So if you can spare 2 seconds to complete our very short learning survey, it is only 3 really quick questions. Your feedback is going to help us decide which topics to cover, how you prefer to learn, and the best ways to share the content with you as well. So you can scan the QR code to complete it, but there is also a link at the bottom of the slide as well if you have downloaded the handouts. So that is it for the webinar today. I will wrap things up by running through some further support. We have our brilliant help centre, so that's sage.co.uk/help. We've got our payroll year end hub live on there at the moment, so a lot of resources to help you through this busy time. We do also have one-to-one training sessions with an expert, so they will support you with your very own payroll year end process. So you can be confident that you are going to get off to a smooth start. Now, charges do apply for this service, but if it is something you think that your business would be interested in, I have again popped a link at the bottom of the slide to register your interest. So I will be sticking around to help out with any remaining questions. So we will leave the webinar open for a little bit longer just to make sure that we've answered as many questions as we can. If you are leaving us at this point, you will see a short survey about the webinar today. If you can take a moment to fill that out, that would be much appreciated. We really do love reading all of your comments. So with that said, I will jump on to mute for now, just to help the guys out with any outstanding questions. But I will see you all shortly to wrap the session up. Hello again, everyone. I hope you've all enjoyed the session today. I will go ahead and close the session down in the next few minutes or so. As you exit, you will see a short survey. If you can take a moment to fill that out, your feedback is really valuable. So we love hearing what you thought, anything that worked well, anything that can be improved so we can keep making these sessions even better for you. You will receive a follow-up email later today. It'll have a link to today's webinar recording on there and information on how to register for any future sessions. But thanks again for joining me today. Hopefully we will see you again soon, but it is goodbye for now.